Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Monday or Moonday, May 19th. Going to be diving into the normal tickers, then maybe go over some random ones that might pop up. I did get a request on X for grab, so I will be going over that chart. And I wanted to follow up on Ondo. So that might be just kind of an expansion of the Bitcoin and Ethereum coverage that I do. And yeah, I also want to note, sorry for starting this about 7 minutes late. Really just the range between 8 to 8:15. I'll be trying to start these, but kind of tough to be waking up in the morning after streaming last night and just, wanting to sleep in. But anyways, let's dive into the charts here. First, looking at the UVIX, which is the 2x long VIX futures ETF, which closed on Friday at 27.64, down 0.9%. But because of that announcement from Moody's downgrading the market, I believe, we have seen a spike in the volatility with the UVIX going up in the pre-market to around $30.17, up just over 9% there. And so I'll dive into the 10-minute chart in a second, but just wanted to look at kind of the bigger picture here. Does look like we have gotten this nice little bounce from 26.23. And so I'm really wondering, are we going to get back up here to test right around $36 to test the underside of that parallel channel, which if I do step back, we can see where that originates from. Got these three pivot points here corresponding with the tops from September 6th as well as December 19th. And then the low over here just, being kind of the lows that we saw there consolidating above them. So that is the top of that parallel channel where we are below now, where we might be testing, but now as resistance, which for the majority of the time, all of the time since I have drawn that based on those pivot points, it has acted as resistance other than this time when we did break above it there. And so, I suspect it will probably be resistance again. I personally would like to see it go up to around $39. I think that's a 20% move for me in the position that I have. But I also recognize that may not happen. So I may want to adjust that if it doesn't seem like we're going to be going much higher than 30. But yeah, we're going to have to wait and see. I do expect that this move that we're seeing to the upside in the volatility, I think it's probably going to be short-lived. I think that, when we look over at the SPY and the SPX, that this rally that we've seen over the past month or so, it's a pretty notable rally, bringing us back to the highs in the market that we saw at the beginning of the year. And so I don't think this is just like, a bear market rally. I think that things are, I don't want to, 10-minute time frame. I'm just going to switch over to the 10-minute time frame for the UVIX. And so, we could see how this traded on Friday. So looks like, I don't know. Not sure that there's anything I want to take away from that, but we can see that in the after hours following that announcement from Moody's into the overnight trading, did go up, held those gains, but then, has pulled back a little bit. Really, 30, that's going to be kind of like a magnet. It seems like it has been at least so far, but the high during the after hours on Friday was 31.86, so nice to see that there. Maybe like 32 ends up being kind of a top. And maybe what I should do, since there is a gap here, there's also another gap over here, maybe I should mark those levels. And so that gap is the closing price from May 9th, 38.12, which I do have marked there. So maybe that's a level that might be, acting as some resistance there. And then let's see, the gap up to here, the close on the 7th was 41.80. So for me, that would be ideal if we could get up to there. And then I could, take 20% profits, maybe leave a little to see if it can run some more. But yeah, those are two levels. 38 makes a lot of sense with this downtrend, the top of that parallel channel. 4180. It's around 42, which is like 420, so maybe that makes sense as well. I'm not really sure. But yeah, I suspect that we will be seeing this gap up and maybe continue higher. And maybe what I should also be pointing out here is I believe this is the window for the gap. The open price here, or maybe it's, yeah, I think that would be at 32.26. We're still below there, so that might be an important level, just thinking about how, if we're consolidating here, this would be like a bear flag, and then that would be like the level we want to break above to kind of invalidate it. But then getting into this gap region, there might be, we might be finding a top there, something like that. But yeah, I'm just thinking, what should I color that? I'm just going to leave it white. But yeah, and let's flip over to the VIX. This is the Market Volatility Index, which closed on Friday at 1724, down 3.3%. Closing notably below 20, where I do have this alert here. And so just to kind of mark the levels I was just putting up on the other chart, the close over here was 2190. And so I'll lock that into place. I'm not going to make the lines thicker anymore just because they get a little bit overwhelming. But this gap over here, the close on the 7th was 23.55. But on the 8th, we hit a high of 23.61. So there is no gap up there. So this gap, not really that notable because the UVIX is an ETF that tracks the VIX futures. So I don't think that this one's really that significant, so I'm going to delete it because it's not supported over here. And yeah, we'll see. Could this be bouncing up to around $21.90 or $22? We'll have to see when the market opens. But then flipping over to the SPY, does look like, well, I should note first, the SPY is the S&P 500 tracking ETF, which closed on Friday at a price of $594.20, 420 right there, going up about 0.63% on Friday, but then pulling back about 1% in the pre-market to below $590, around $588. And what we can see is that I did have these drawings up here, these trend lines suggesting that there are these uptrending levels of resistance up here, support down here, and maybe I should color those to suggest that this is resistance and that this is support. And yeah, I mean, we're really just kind of testing the top of that. Let's see if I just continue that up. And yeah, but maybe getting rejected. Maybe we do pull back down to, either this trend line here. It's really just tightening. This does seem like it's eventually going to break down, but it could break down and then create what might be like a bull flag before going higher. But yeah, I mean, I could see this coming down to around 575, somewhere around there. So do keep an eye out for that. But yeah, let's see. I did mention where we were at the beginning of the year. So let's see, where was January 2nd, I believe, was the start of the year. So the high on January 2nd was $589.36. So yeah, everything that we, pulled back from for this year, we've reclaimed. And we can also see that looking at the monthly time frame. And this actually looks like a pretty bullish pattern, in all honesty. This massive wick to the downside being bought up. And yeah, this is a pretty big red candle, suggesting that this is bearish. This is a reversal with that big wick, kind of a dragonfly doji almost. And then this reversal candle reclaiming basically. So, I mean, we opened March at a price of $594.39. And then while May is not over yet, If we do close around where we're at now, if we close higher, that looks super bullish. I don't think we're in a bear market. I think, it looks something like this, big red candle, everybody's panicking. And then you get something like this, move up, continuation. So, and I should note that was from 2023. So, yeah, not looking so bad there. But maybe, did I look at the 10-minute time frame? I don't think I did. So over here we can see Friday dipped down, then moved up, but then following that announcement from Moody's, I'm just trying to see if that's in the news over here. Let's see. I'm not really seeing it. Charlie Munger once said, "The first rule of compounding is to never interrupt it unnecessarily." And so that, I feel like, is panicking on this little pullback, this 1% pullback that we're seeing into the after hours Friday. And then the overnight still bleeding down to a low of 586.21, but then bouncing. Now, see, we have lower lows here, lower highs here, but then what do we start to see? Higher lows, higher highs now. So that is a change in trend. So maybe this does start to bounce. I suspect it will be short-lived, whether that's within the span of the day, over the course of the week, or maybe into next week. Maybe we start to see the bottom and then it continue higher. And then looking over at the SPX, this is the S&P 500 index, which closed on Friday at $5,958.38. We'll compare that to the start of the year as well, just like we did with the SPY. But yeah, this does also have kind of the trend line, resistance look going up here. Just gonna make that red, and then the trend line support down here. Maybe I could do it something like that, just being approximate. But that, being a rising wedge, tends to break to the downside. Maybe we see a retest of around 5,700 before perhaps a bounce and continuation to the upside. And we can see, let's see, I'm just going to remove the drawing so we could look at that monthly. And yeah, this looks like it could be setting up for a very clear, reversal, just kind of a continuation of what we saw in April, suggesting that the bottom's in with that big wick to the downside, similar to what we saw over here, just a continuation to the upside. But let's see where we opened the year at. So January opened at a price of $5,903. And yeah, we are above that. So we did reclaim any of the bleeding that we saw over the course of the year thus far. But yeah, don't really have too much to add to the SPX. So I'm going to flip over to Bitcoin here. And we have just been, consolidating here nearly at the end of this 2-week range that I was talking about. Currently trading around $102,500, $102,500, and did hit a wick high of around $107,000 yesterday. And we did close the week at, a new all-time high for the close. But we could be seeing a little bit of a pullback. And to note that, my nose is running a little bit this morning. Just to note where that high was, or that close, that highest close, I'm just going to pull it up in TradingView. And so we could see this is on the daily. And so yesterday's daily candle closed at a price of 106,473. And if we do look at this on the weekly time frame, we can see that as the highest weekly close because the close is over here. We didn't get above. And that really does make a lot of sense if we, let's see, just draw a trend line here from the approximate close there. Just drawing that, I'm holding shift so it goes horizontal. That's kind of like the consolidation highs there where you have, a close and an open right there and then multiple wicks above that level. that makes sense to be kind of like a stop loss, or not a stop loss, a take profit level. So it does make sense that for wicking above that, going above it, closing above it, there would be some profit taking there. But yeah, I mean, we could still continue. And that is the weekly as well. So if I switch back over to the daily, I don't know why this is going so slow. But yeah, looking at the daily here, yeah, we did have a good amount of consolidation there, testing that high. And really just like the high on December 5th was 104,000. And so that is, does make sense that that would be, acting as some resistance there. But yeah, pulling back to the chart here, I think that if we do see dips, buying opportunities, that would be around $102,000 to $101,000. Maybe getting to 100, maybe getting to 99, I don't know. But that is really just based on this 382 Fibonacci retracement, which I should actually adjust because we did hit a higher high over here. And so with that being said, I'm just going to adjust that. And so that 382 gets moved to around 102,000, but maybe I want to add another level to this retracement. So I'm just going to do the 50%, and that's around 100,000. So really like 100 to 102,000, average that to around 101. Could be, some nice dip buying opportunities there before the next leg up. And speaking of the next leg up, I do have this Fibonacci extension, as you can see there, based on the low here to the high down to this low. That's suggesting price to be getting to around 108,000, right around the all-time highs. But what I can do is, let's see, do another Fibonacci extension that would be suggesting, based on how I've drawn it here, that the top could be around 113,000. But since we have a new high here, I'm just going to move that over to that high. And while the low is kind of wonky, going back in time for that, I'm just going to keep it there just to have that kind of actually, well, what I should do if I do have, let's see, if I do have this thesis that we could be, there we go, I just got to get this lined up, that we could be coming down to, really just the level here, that right around 101,000. And so I'll just actually do that at 3 zeros there, 101,000. And so where could that be taking us to the upside? That will be suggesting around 114, 115. And I do believe that also corresponds with a high level that I have drawn over here corresponding with this red line. But in order to get an idea of where that would be, and actually before I do that, this is, on the log scale, this is on the linear scale. I will switch over to the log scale, but we can see that yellow uptrend, that would be suggesting a price of around 112 to 15, somewhere around there. But then if I adjust this to the log scale, we could see that top there would be, this is like 165. This would be higher than that. So yeah, I mean, that could be like a later in the year top, maybe around 200,000. But if we do this regular, adjust that, so it's the linear scale on the y-axis. Yeah, I mean, I think that this yellow uptrend right around, 115, 120 maybe, corresponding with the tops over here. And, this pivot high from the end of 2017, we could be seeing some resistance there. So I'd look for a move in the next couple weeks up to around 110 to 120, somewhere around there. But yeah, just going to pull back to over here to look at Ethereum, currently trading around 2,400. And yeah, we didn't get an all-time weekly close on this one, an all-time weekly high, because it's not trading at all-time highs. We are, consolidating in this range. I think that we could see, maybe by the 24th, which is, let's see. So this is Tuesday, Wednesday, Thursday, Friday. So maybe by the weekend, we start to see this maybe breaking out. But yeah, really just consolidating here, as I've talked about in many videos. I think that Ethereum could be hitting 8,000 later this year, but of course, 3,000 is going to be a level of resistance, just being psychological. That is also going to correspond with kind of the lows over here. So there's some consolidation above there. So maybe we get some wicks to above 3,000, but some rejections before ideally doing some more consolidation like we've seen over here to then suggest the next move up, which could be around 3,400, 3,500, somewhere around there. And then definitely I would expect having some resistance around 4,000, as that has been, the top the past year or so. But looking back in time, we have seen higher highs. Like if I switch over to the weekly time frame, and let's see, how do I adjust that over here? It's at the bottom in Webull. Getting more used to TradingView. The all-time high is just shy of 4,900. But yeah, I mean, I think that, and this was also pointed out in a clip from Raul Paul from, Altcoin Daily, and he pointed out that what we're seeing here, upside move, and maybe I want to do this on the, I don't know if the log scale makes this better. I'm going to remove my drawings. But if I do this on the log scale, I don't know if this makes it look better. Yeah, this actually makes it look way nicer. So yeah, I mean, if I look at this on the linear scale, it doesn't look so crazy. It's just like up, down, up, down. This is not like a really clear pattern or anything. But if I adjust the y-axis to be log, this looks like, hey, upside move, bullish consolidation, massive breakout. Here, upside move, consolidation, massive breakout. So considering that, I'm going to actually just do Fibonacci. Drawings are going to pop up, so maybe it's going to be a little overwhelming. Yeah, it is. But, what we can do is, and this is actually, these fibs are not going to be log fibs. So what I probably want to do is just come back to this and then pull it up in TradingView. I think that's just going to be a better way to look at the chart. So get these pop-ups out of the way. Ethereum, looking at the data from Coinbase. And so, okay, what we have is we want to see the log scale. Let's see, regular. No, I want log right there. And I might actually switch this over to the weekly. So we just have a little bit bigger perspective. And so what we can see, if I do a Fibonacci extension from the lows over here up to the highs here and then down to these lows, that suggested a high of around 6,100. We didn't quite get there. And so what would maybe be good, that's a 786. So maybe I want to add the 618. That's around 2,400. Okay. And then because there's a lot of clutter here, just to kind of keep those levels in mind, I am going to delete that extension, keeping in mind that the 618 to the 786, that range was the high following this move. I suspect it won't be insane for this Fibonacci extension that I'm going to do here, but let's just see. So going from the lows over here, get that approximately lined up, then to these highs at around almost 49, right around there, just being approximate, and then pulling back to the low here. Where does that suggest price could be going? And maybe I want to color this red. That would be suggesting where we might want to be taking some profits. This would actually be suggesting $11,000, so well above 8,000, and that would correspond with February. That would be February of 2024. So that's in the past. I was thinking about the intersection with this uptrend, but yeah, I mean over here in the future, maybe later this year we could be seeing, 11,000. So actually, no, later this year. Yeah, later this year. But then also these other levels, the 786 would be around 22,000, and the 100% extension would be 53,000. So pretty massive. Do I think that's going to get to all of those levels? Maybe. I think that 8,000 is a realistic target, and anything beyond that is, why you want to have a strategy to have some moon bag just to hold to take advantage of any further upside. But yeah, just going to switch this back to the linear, which is less fun to look at. Come back to the daily. And then the other one that I wanted to look at, another crypto, is going to be Ondo. And so this is one that I did talk about over the weekend during my crypto corners. And I was talking about considering adding to my position if it did dip down to test this green uptrend, which I did draw on Saturday, really just based on the, kind of like consolidation lows, uptrending a little bit over here back at the beginning of April. And then we did get a fake out break below it. Maybe that's a spring. I don't know. And then since then, we have been putting in higher lows. And so like the low over here on May 6th was at a price of 82.8 cents, right around there. And so, what I'm thinking is with it right around 90 cents, that's what I was going to wait for. That's what I was planning on. So I will probably add to my position via Uphold. It's the exchange I use for Ondo. Their fees are 99 cents per trade. Maybe the spreads aren't as good as Coinbase. I'm not really sure, but Coinbase's fee, I believe, for a purchase the size I would make is, I believe, $1.49. And that is, to be honest, not too appealing to me. I'd rather just do the 99-cent fee, keep it simple. And but then bouncing from around where it's at, just like it did over here. So from the line, not necessarily from the lows, but so from that line up to the line over here, that was, over the course of 4 days moved up 28%. But if we do the same kind of move from where it's at right now to the red line up there, that represents about a 34% move to the upside. So yeah, just looking really nice. I'm liking what this is doing here, but maybe, this is a downside move, consolidation. Maybe it's a bear flag and it continues lower, but that would really be, signaled if we did start to head lower than the low over here from May 6th, which was around 82, 83 cents, somewhere around there. But yeah, and then I'm just going to pull up ticker symbol URA, which is the Global X Uranium ETF, which closed on Friday at a price of $27.71, down about 1%, and down another 1%. It looks like in the pre-market. So yeah, I had kind of been suggesting with this doodle that it'd be finding a top around 28. We did hit a high of 28.31. So now at this point, I do think this could be pulling back to this red line here around 26, maybe coming down to around 25 or 24.50. So do consider that. I do still have a small position in Oklo, but it's a pretty small position. I believe just one share, and I have a stop loss, so I'm not too worried about that. And then also I'm just going to note the time, about 28 minutes. And so I am going to go over Grab, which was requested on X. And so Grab, which is Grab Holdings, closed on Friday at a price of $5.09, up about 0.59% on the day, but then pulling back around 1.57% so far in the pre-market, trading around $5. And so where do I see this going? Obviously, I had previously thought that this would either consolidate over here or start to pull back. I was wrong about that, but really, this did kind of make this move up to around this range. So maybe it's getting near a top. Why did I draw that to around there? And I think that really just corresponds with kind of the highs over here, consolidation highs, wicking above it, going above it a little bit. But also thinking about this potentially being in a downtrend. And why do I say that? Because we do have lower lows being formed over here. And we do have, actually, this is a slightly higher high. But from this high, we do have lower highs. So that could be suggesting that it is at resistance. So what I might do is do a ray here just to get the exact pivot highs from these 2 points. That is just above our heads. I'm going to make that line thick and make it red. I think that's going to be some notable resistance. So I would keep that in mind. And then thinking about this, I'm just going to do this kind of casually, a trend line down here. From the lows here, we can see that we have been, yeah, I mean, we did kind of break that trend line there. So let's see, yeah, kind of a fake out break, retesting these this prior trend line, which we have broken below before, but that was a dip buying opportunity here again. Yeah, I mean, I think that this is right around resistance. And if we think about this trading in a range, and maybe this is, widening. Let's see, how do I want to draw this? Maybe I'll do just a parallel. I don't really like how these are drawn in Weeble here, but if I do something like that, this is, oh, that's a polygon, not a polyline. I want the parallel. So, and actually, that level, I shouldn't have locked it because I didn't have it lined up right. Oh man, I'm just gonna zoom in. This really doesn't matter, but let's see. Yep, still a little bit above us, but yeah, just those 2 pivot points there, the pivot highs. But yeah, just doing a parallel kind of based on the same levels. So I'm just going to do it from like the consolidation highs over here. So like the closes over there and the close that we recently saw on, it looks like the 14th, and then pulling that back over, let's say, I don't know. I mean, there's kind of some wiggle room with the bottom of that. I'm not sure how significant that is. But let's see if I, being approximate in there, did bounce from that level multiple times, got this big breakout below. But yeah, this does look like it's just trading in this kind of range. And so at the top here, I'd expect it to do something at least like pull back to around the 50% mark, maybe consolidate there, form a bear flag, and then continue lower. Or, maybe it just pulls back, but then bounces, gets above that level, and then goes higher. So that's possible, but I do think that we need to cool off. I mean, looking at the chart here, we can see the measurement here from the bottom to the top. That is, 56% move, not 100% move, but still that's pretty notable in the span of, a month and a half. So yeah, I mean, I could see that definitely happening. And looking at this, 50% level, let's do a 50% of that channel, the halfway point. If we do a Fibonacci retracement, we can see that does correspond with a 382 here. So maybe that's a level that it could be retesting. And if we do, let's see, over here, so this is a lower high. And what do we have with the RSI? We can see that we have gone to a higher high in the RSI. And so that is hidden bearish divergence. Bearish divergence would be higher high up here, lower high down here. We see the opposite of that. So that's hidden bearish. And the reason why that's not bullish is because bullish divergence is based on the bottoms, whereas bearish divergence is based on the tops. And so what we see here is a weakening, the price not getting as high as it was over here, but the RSI showing kind of some exhaustion. It's getting, overbought. And then if we do look back over here, though, we do see lower highs in the stock price. We haven't gone higher than the highs over here, which was around 86, 87 for the RSI. But over here now, the high was most recently around 69, 70. And so there is some more room for this to continue up, but I do think that, unless it can get above 572, which was the highs over here, I think that it's going to be putting in some bearish divergence relative to this point on top of this point here, which we're seeing. But if we do go higher than this high that was hit on February 18th, the next high is from November 21st. That's 572. We go higher than that, but the RSI is lower than 86. That's then bearish divergence, not hidden, and that would be suggesting a pullback. So yeah, I mean, I'd be prepared for a possible, I guess that's a 10% drawdown from where it's currently at, around $5. So good to be cautious of that. And yeah, with that being said, don't really have anybody in the chat. Not sure if that's because pre-market prep is not as exciting as overnight market prep, or if because I'm a little tired. You can probably tell I got some low energy, or or because I did Ticker Request Live last night. Oh, and one other thing, I was just thinking about this. Moving averages for this, for grab, all below. So yeah, I mean, I think that it's probably a little bit overextended. So I think, like, if, you could think about it like this. If I don't have a position in it, but if I did have a position, I had established somewhere over here, I'd be in the green right now. And so at this point, it seems like there's some risk that we'd be seeing a rejection. And so I might want to take some of that risk off the table by selling some. So if it does dip, then I could buy back. If I have conviction in the stock, the company, I want to hold it. But if not, just take that risk off the table. If it does continue higher, then still be holding some to take advantage of that, especially if one really likes the company. But if one doesn't care about it, I think that, it's up right now pretty notably. And there's likely, in my view, to be opportunities to buy back a little bit cheaper. So might as well do that. But yeah, I think I'm going to wind down the stream over here just to have some coffee, open my eyes up a little bit. As you can tell, I'm pretty tired here. But yeah, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. I'll be doing another pre-market prep tomorrow morning right around 8 a.m. So stay tuned for that. Take care, you guys.